Are you wondering if it makes sense for your business to change its tax structure from a sole member LLC to an S-Corp LLC, or an S-Corp in general if you're not an LLC? Most people are LLCs anymore. But if you are not filing as an S-Corp LLC, you could be spending way too much money and giving it to the government, depending on your profit. And that's what I'm going to talk about in this video. For those of you who don't know me, my name is Audrey Faust, and I'm a business financial coach that helps women create a business that's profitable, has the mindset to continue growing it profitable, and nothing is standing in their way. That's you. Love to help you. And if you want to hear more, please feel free to reach out. But today I want to talk about an S-Corp and the tax benefits of an S-Corp. So a lot of what I talk about with my clients is strategy. It's mindset and strategy. How to grow a profitable business with strategies, but make sure that mindset is in place too. I'm going to share a strategy with you that's going to save you money in taxes, possibly, depending on your net profit. So the first thing you want to make sure you know is what is your annual net profit or even monthly net profit multiplied by 12, right? If you are having a really awesome net profit, it's important to figure this out. And what I come across a lot of times is women, any business owner actually, not just women, spend a lot of money trying not to pay taxes by buying stuff that may or may not need for their business. This is not a great strategy to grow your business because you have to live on the money you're making in your business. If you're not paying taxes, you're not making money, then there's nothing for you to live on either. So it's just a recipe for your business to go under. So profit is good. And I'm going to share with you a strategy when your profit gets to a certain point, how you can save money in taxes. And why do you wait until it gets to a certain point? Well, there are expenses in moving from a sole member to a S-Corp tax structure. One, you're going to have to file an additional tax return. So you're going to have to file what's called an 1120S, and in addition to your personal tax return. That's going to cost you more money for your CPA to do 2 tax returns instead of 1. The other thing you're going to have to do is you're going to have to run a payroll. So running a payroll is going to be an additional expense. So you want to take into account what it's going to cost to have that additional tax return. You want to take into account what it's going to cost to run a payroll. And then you want to look at if it makes sense for you to be an S-Corp. How do you do that? So what you need to set up as an S-Corp is a reasonable salary, which is why you have to run payroll. You can get advice from your CPA about what your reasonable salary should be. I've had different CPAs tell me, well, what were you making in your last job? Or, what were you, what do you think your salary should be? And this is not the only way you're going to pull money out of your business. I've had other accountants tell me like a good way in the beginning is to kind of take 50% of your profit and put it in your salary. None of this is tax advice, and I'm just sharing this with you to speak with your CPA about it. But even knowing a little bit of this beforehand, you'll know whether or not it makes sense to even pick up the phone and make that phone call to your CPA. So the minimum threshold I usually would say to speak with your CPA is a $50,000 annual net profit. It's going to cost you an extra couple thousand to run the payroll and get your tax return done. So if the amount of money you're saving, let's just take 50,000 for example, right? Let's say you have a $50,000 net profit. You could make a $25,000 salary and then put $25,000 in distributions. So the way you're doing things now is you're just pulling money out. They're called owner's draws. When you become a LLC, they're called distributions. It's the same thing. You're just also getting a paycheck. But now the distributions that you're pulling out or the net profit that you have is not taxed that 15% Social Security. So you need to multiply whatever your net profit is, or half of your net profit, times 15% to see if it makes sense for you to move into an LLC, and then subtract out how much it would cost for you to run a payroll for a payroll service and for your additional tax return. There are other minor factors, but this is just a simple way for you to identify if it makes sense to pick up the phone and talk to your accountant about filing the form, because you have to file a form. You can't just decide you're going to be an S-Corp. If it makes sense for you to file the form to go from a sole proprietor to an S-Corp tax strategy. You cannot go back. That's the con, or the con about it. The pro is you can't go back all of a sudden. So you want to make sure your business is in a place where you're actually ready, that it makes financial sense to do this. If you want to have a conversation with me about it, I'm completely open to do that. You can schedule a profit plan session with me, and I'll put the link below this video. And we can talk more about if you should make that phone call to your CPA, and we can do a little math together. But again, you could just call your CPA and he can also do the math and help you with the math. You just need to know if it makes sense. You also have to do it a certain time of the year. You have to get it approved by the IRS. So if you're coming up, if it's the end of the year, maybe it's something you want to do next year. If it's the beginning of the year, sometimes you can backdate it to the beginning of the year. If you've had a really, really good year and you're like, well, this makes sense for me to do it this year, why would I wait till next year? Again, these are things you need to have conversations with your CPA about. In my next video, I will talk a little bit more about this, and we will dive in deeper to a step-by-step process in actually doing the S-Corp.